discovered my business partner was embezzling money to fund his gambling addiction. The IRS was very interested to learn this. 3 years ago, I thought I had found the perfect business partner. We had been friends since college, shared the same vision for our tech startup, and seemed to complement each other perfectly. He handled the financial side while I focused on product development and client relations. Everything seemed to be going smoothly until small inconsistencies started catching my attention. It began with minor things that I initially brushed off. Our monthly reports showed slight discrepancies that he always had reasonable explanations for. Equipment purchases that seemed higher than they should be, client payments that took longer to process than usual, and office expenses that fluctuated wildly from month to month. I trusted him completely, so I never questioned these anomalies seriously. The first real red flag came during our quarterly review meeting with our accountant. When I mentioned a specific client payment that I remembered being particularly large, the accountant looked confused and said the amount recorded was significantly lower than what I recalled. My partner quickly jumped in, explaining that there had been a last-minute discount applied due to some technical issues we had resolved for the client. It sounded plausible, but something felt off. I started paying closer attention to our financial records after that meeting. Late nights in the office became routine as I cross-referenced client contracts with payment records, expense reports with actual receipts, and bank statements with our internal books. What I discovered made my stomach turn. Over the past 18 months, nearly $40,000 had gone missing from our accounts. The money had been siphoned off through a combination of inflated expense reports, fake vendor invoices, and manipulated client payment records. The scheme was sophisticated and well-planned, involving multiple fake companies and even a separate business bank account that I knew nothing about. The worst part was realizing how long this had been going on. Looking back through older records, I could see the pattern extending back almost to the beginning of our partnership. Small amounts at first, then gradually increasing as he became more confident in his methods. By the time I discovered it, he was taking money almost weekly. I felt betrayed, angry, and foolish all at once. This was someone I had trusted with my financial future, someone I had considered a close friend. The realization that he had been stealing from me while I worked 60-hour weeks trying to build our company was devastating. My first instinct was to confront him directly, but I knew I needed concrete evidence before making any accusations. I spent the next 2 weeks documenting everything, creating a detailed timeline of the theft, and gathering supporting documents. I even hired a private investigator to help me trace some of the more complex transactions. What the investigator uncovered was shocking. My partner had been frequenting several casinos in the area, often on weeknights when he claimed to be working late. Credit card records showed substantial cash advances, and surveillance footage from one casino showed him losing large sums of money on a regular basis. The gambling addiction explained where all the stolen money had gone. The investigator also discovered that this wasn't his first time embezzling money. He had been quietly let go from his previous job under similar circumstances, though charges were never filed. His former employer had simply written off the loss to avoid the publicity and legal costs of a prosecution. Armed with this information, I faced a difficult decision. Part of me wanted to give him a chance to explain, to pay back the money, and to get help for his gambling problem. But the rational part of my mind knew that the betrayal was too deep and the financial damage too severe to simply forgive and forget. I decided to consult with a lawyer before taking any action. The attorney was straightforward about my options. I could confront my partner privately and try to work out a repayment plan, or I could report the embezzlement to the authorities and let the legal system handle it. There was also the option of pursuing civil remedies to recover the stolen funds. The lawyer also mentioned something that hadn't occurred to me: the tax implications of the embezzlement. Since the stolen money had never been properly reported as income, and since some of it had been claimed as business expenses, there were likely significant tax issues involved. He suggested that I might want to contact the IRS to protect myself from any potential liability. That conversation changed everything. I realized that this wasn't just about the money my partner had stolen from me. It was about the potential tax fraud that his actions had created. If the IRS decided to audit our business, I could be held liable for taxes on money that had been stolen from the company. I spent several sleepless nights weighing my options. The friendship we had shared made the decision incredibly difficult, but I couldn't ignore the financial reality of the situation. My business was struggling to stay afloat, and the stolen money represented a significant portion of our working capital. The turning point came when I discovered that he had been using company credit cards for personal expenses, including cash advances at casinos. This wasn't just embezzlement anymore, it was credit card fraud. The amounts were substantial, and the pattern of abuse was undeniable. I made the decision to report the embezzlement to the IRS first, before confronting my partner or involving local law enforcement. The IRS agent I spoke with was professional and thorough, asking detailed questions about our business structure, financial records, and the specific nature of the theft. What surprised me was how interested the IRS was in the case. The agent explained that embezzlement cases often involve multiple types of tax fraud, including unreported income, false deductions, and failure to pay employment taxes. In our case, the stolen money had been claimed as business expenses, which reduced our tax liability artificially. The IRS investigation moved quickly. Within 2 weeks, they had requested copies of all our financial records and had begun their own analysis of the embezzlement. They also started looking into my partner's personal tax returns to determine if he had reported the stolen money as income. During this time, I had to continue working with my partner while pretending that nothing was wrong. It was one of the most difficult periods of my life. Every conversation felt fake. Every business decision felt tainted by the knowledge of his betrayal. I found myself second-guessing every financial transaction and wondering what else he might have hidden from me. The stress was overwhelming. I lost weight, had trouble sleeping, and found it difficult to concentrate on work. The business was suffering because I was spending more time investigating the theft than focusing on our clients and projects. Several important deadlines were missed, and we lost 2 major contracts due to my distraction. 3 weeks after I first contacted the IRS, they informed me that they would be conducting a formal audit of our business. They also mentioned that they had referred the case to their Criminal Investigation Division, which meant that federal charges were being considered. That's when I knew I had to tell my partner what was happening. I couldn't let him walk into an IRS audit unprepared, despite what he had done to me. I scheduled a meeting at our office for early Monday morning, planning to confront him about the embezzlement and inform him about the federal investigation. The weekend before that meeting was torturous. I rehearsed what I would say, how I would present the evidence, and how I would handle his inevitable denials. I also prepared for the possibility that he might become violent or try to destroy evidence once he knew he had been caught. Monday morning arrived, and I was in the office early, organizing my documents and preparing for the confrontation. But my partner never showed up. When I called his phone, it went straight to voicemail. I tried his home number and got no answer. By noon, I was worried that something had happened to him. I drove to his apartment and found it empty. His landlord said he had moved out over the weekend, leaving no forwarding address. His car was gone, and his neighbors hadn't seen him since Friday evening. It took me a moment to process what had happened. He had somehow learned about the investigation and had fled. I immediately called the IRS agent and local police to report that my partner had disappeared. The IRS agent seemed unsurprised and mentioned that suspects often flee when they realize they're being investigated. The investigation continued without him. The IRS discovered that the embezzlement was even more extensive than I had originally thought. Over the 3-year period of our partnership, he had stolen nearly $70,000 from the business. The tax implications were staggering, involving unpaid payroll taxes, false expense deductions, and unreported income. What made the situation even worse was that I was potentially liable for the unpaid taxes, despite being a victim of the embezzlement. The IRS explained that as a business owner, I had a responsibility to ensure that all taxes were properly paid, regardless of whether money had been stolen from the company. The civil penalties alone were more than $15,000, and that didn't include the interest and additional taxes owed. I was facing financial ruin, and the person responsible had vanished without a trace. I hired a tax attorney to help me navigate the complex process of dealing with the IRS. The attorney was experienced in embezzlement cases and knew how to present my situation to minimize my liability. He also helped me understand the various programs available to victims of employee theft. The attorney's first recommendation was to cooperate fully with the IRS investigation. This meant providing all requested documents, answering all questions honestly, and helping them understand exactly how the embezzlement had occurred. He also suggested that I consider applying for innocent spouse relief, which could reduce my tax liability if I could prove that I had no knowledge of the fraudulent activities. Working with the IRS was surprisingly collaborative. The agents understood that I was a victim of the embezzlement and were willing to work with me to resolve the tax issues. They explained that their primary goal was to collect the taxes owed, not to punish innocent victims of employee theft. The process took several months, but eventually, I was able to negotiate a payment plan for the unpaid taxes that wouldn't force me into bankruptcy. The IRS also agreed to waive most of the penalties, recognizing that I had been a victim of fraud rather than a willing participant in tax evasion. During this time, I also had to deal with the practical aspects of running a business without my partner. I had to learn the financial side of the operation, find new clients to replace the revenue we had lost, and rebuild the company's reputation. It was exhausting work, but it was also empowering to take full control of my business. The most difficult part was explaining to our clients and vendors what had happened. Many of them were shocked to learn about the embezzlement, and some questioned whether they could trust the company moving forward. I had to be completely transparent about the situation while also protecting the business's interests. 6 months after my partner disappeared, the IRS completed their investigation and issued a report detailing the extent of the embezzlement. They had traced the stolen money through multiple accounts and had documented the pattern of theft over the 3-year period. The report was forwarded to federal prosecutors for consideration of criminal charges. The federal investigation led to an interesting development. Investigators discovered that my partner had been involved in similar schemes at 2 other companies before joining my business. The pattern of embezzlement stretched back nearly 10 years and involved hundreds of thousands of dollars in stolen funds. This information changed my perspective on the entire situation. I realized that I hadn't been dealing with a friend who had developed a gambling problem. I had been dealing with a career criminal who had targeted me specifically because of my trusting nature and lack of financial oversight. The FBI eventually tracked my partner down in another state, where he had been working under a false identity at yet another small business. When they arrested him, they found evidence that he had been planning to embezzle money from his new employer as well. The arrest brought me a sense of closure, but it also raised new questions about my own liability. Since he had been caught, there was a possibility that some of the stolen money could be recovered through asset forfeiture or restitution orders. However, the reality was that most of the money had been lost to gambling and would never be recovered. The criminal case moved slowly through the federal court system. My partner was charged with multiple counts of wire fraud, money laundering, and tax evasion. The charges carried substantial prison sentences, and his attorney eventually recommended that he accept a plea bargain. As part of the plea agreement, he was required to make restitution to all of his victims, including me. However, the restitution order was largely symbolic, since he had no significant assets to seize. The judge sentenced him to 4 years in federal prison, but I knew that I would likely never see most of the money he had stolen. The experience taught me valuable lessons about trust, oversight, and the importance of maintaining control over my business's finances. I implemented new procedures to prevent future embezzlement, including regular audits, separation of duties, and mandatory background checks for all employees with access to financial records. Rebuilding the business was challenging but rewarding. Without the drain of stolen funds, the company's financial position improved dramatically. I was able to hire new employees, invest in better equipment, and expand our service offerings. The business grew steadily, and within 2 years, it was more profitable than it had ever been with my former partner. The most unexpected outcome of the entire ordeal was the relationship I developed with the IRS. The agents who had worked on my case were professional, fair, and genuinely interested in helping me resolve the tax issues created by the embezzlement. They helped me understand the complex tax laws and provided guidance on how to prevent future problems. I also learned that the IRS has specific procedures for dealing with embezzlement cases. They have programs designed to help victims recover from employee theft, including provisions for reducing penalties and interest charges. The key is to report the theft promptly and cooperate fully with the investigation. Looking back, I realized that the red flags had been there from the beginning. The inconsistencies in our financial records, the unexplained expenses, and the reluctance to provide detailed documentation should have raised concerns much earlier. My trust in our friendship had blinded me to the obvious signs of embezzlement. The experience also highlighted the importance of having proper financial controls in place, even in small businesses. Simple procedures like requiring dual signatures on checks, regular reconciliation of accounts, and periodic audits by outside accountants can prevent most embezzlement schemes. The emotional impact of the betrayal was perhaps the most difficult aspect of the entire situation. Losing money was painful, but losing a friendship that I had valued for years was devastating. I had to come to terms with the fact that the person I thought I knew had never really existed. The stress of dealing with the embezzlement, the IRS investigation, and the criminal case took a significant toll on my health and personal relationships. I became withdrawn and suspicious, questioning the motives of everyone around me. It took time and effort to rebuild my ability to trust others. Eventually, I was able to put the experience in perspective. While the embezzlement had been a significant setback, it had also taught me important lessons about business management and personal relationships. I had emerged from the crisis with a stronger company and a better understanding of my own capabilities. The story has a somewhat ironic ending. 3 years after my partner was sentenced, I received a call from the IRS informing me that they had recovered a small amount of money through their asset forfeiture program. It wasn't much, but it was enough to cover the legal fees I had incurred during the investigation. More importantly, the experience had transformed me from a naive business owner into a savvy entrepreneur who understood the importance of financial oversight and due diligence. The lessons I learned from the embezzlement helped me avoid other potential problems and made me a better business person overall. Today, my company is thriving. We have multiple employees, a diverse client base, and strong financial controls. I've also become an advocate for other small business owners who have been victims of employee theft, sharing my experience and helping them navigate the complex process of recovery. The relationship with the IRS evolved into something resembling mutual respect. They recognized that I had been a victim rather than a perpetrator, and I appreciated their professionalism and fairness throughout the investigation. It was a reminder that government agencies, despite their reputation, are often staffed by dedicated professionals who genuinely want to help taxpayers comply with the law. The entire experience, from discovery to resolution, took nearly 4 years. It was a difficult period that tested my resilience and determination, but it ultimately made me stronger and more successful. The betrayal by my partner was devastating, but it also opened doors to new opportunities and relationships that I might never have discovered otherwise. In the end, the most important lesson I learned was that trust must be earned and verified. Even the closest relationships require proper oversight and accountability when money is involved. The old saying about trust but verify has never been more relevant than in business partnerships where financial responsibility is shared. The embezzlement cost me money, time, and emotional energy, but it also gave me invaluable experience and knowledge that I continue to use in my business today. Sometimes the most painful lessons are also the most valuable, and this experience certainly fits that category.